Welcome back. Well, let's get in some perspective on the fundamentals of the market. We have Ajay Tyagi, the Executive Vice President and Fund Manager at UTI MF, who's joining in to discuss the markets now. Ajay, hi. Thank you very much for taking the time out. Well, let's get down to, in fact, discussing stocks. Right before we took this break, we were talking about how Ashok Leyland is at a fresh 52-week low. CLSA has cut its target price all the way to 75, and according to them, the CV industry itself is staring at a down cycle after 5 years of an up cycle. What's your recommendation towards stocks which have exposure towards the CV cycle and which have fallen as much as the likes of Ashok Leyland?
Yeah, so good morning, Ekta, and as you're aware, I cannot speak on specific stocks. But yes, as far as our view on the CV cycle is concerned, I guess we've seen a fairly strong cycle in the last 3 to 4 years, and we are of the view that at some point in time we would see a softening of the cycle, because the previous cycles over the last 20 years, if you observe them, haven't really gone beyond 4 to 5 years. So that's the broad view that we too hold on the CV cycle.
Okay. Ajay, just a quick point. This entire IL&FS issue and the turn it has taken. I mean, so far people were worried about exposure of lenders to the holding company. But, well, everybody was sanguine that, okay, exposure to SPVs is protected because there is cash flow there, actual projects, etc. People aren't very sure anymore about it because the interpretation is that while these assets may be generating cash, but that cash cannot be used to pay out lenders. It has to stay in the escrow. How serious an issue can this be, according to you? And in a way, it kind of, if this is not resolved, doesn't it put a big question mark on the entire structured finance business? I mean, have you thought about it, Ajay?
Yeah, that's a good question. In fact, we've been scratching our head over the last 2 days ever since we saw that CRISIL downgrade. So you're absolutely right. SPV structures are supposed to be ring fenced, which basically means that the first right out of the cash flows of that SPV belongs to the bankers and the financiers of that SPV. So we too are a little worried about what has happened in the last couple of days. I think for sure this has to be challenged in the courts. Otherwise, the entire system runs at a risk. And I see very little chances of how this will not be shot down in the courts in terms of not allowing the SPV and the cash flows which are sitting in with the bankers of that SPV to basically service debt and principal. So it has a very poor legal standing in the court of law. It goes against the contract law, so to speak.
So you're saying,
but as of now, yeah, go ahead.
No, so you're saying you're pretty confident that this would, it would be ring fenced and the courts will take that view. So there is, while it is worrying at this stage, but it should get resolved.
Yes, it should get resolved. I think the new IL&FS board is also trying to figure out, what all are the, where all are the kind of deficits that are there in terms of servicing of interest, and they're just trying to figure out the overall extent of damage before they find a solution to it. And I think possibly in the interim they have also asked their SPVs to kind of hold on to whatever cash flows that are there. It really doesn't have a very strong case to my mind in the court of law.
Okay, well, what about a couple of these stocks such as Sun Pharma, where maybe the governance premium has probably reduced for, a couple of them? There have been examples that these kind of issues which the likes of Sun Pharma have faced tend to linger, and then, your PE basically gets re-rated. Do you think that this is going to be probably a long-standing problem for a company such as Sun?
Yeah, so again, I can't be too specific in terms of my commentary on a particular stock, but on the larger picture, you're right. I guess corporate governance issues, they ought to be addressed in an immediate manner. I think the company that you're talking about has tried to do that. In the fullness of time, we always believe that, of course, corporate governance is the basic hygiene factor which any corporate ought to be following. But in the fullness of time, what drives forward share prices are the underlying earnings growth. So therefore, once these corporate governance issues are addressed, investors ought to be looking back at, what would be the progress of the company in terms of its US generics business or, the India formulations business and the emerging markets business. So that's what's going to carry forward, the journey for the company and the stock.
Ajay, just one last quick question. This is the broader market. Are we seeing the market kind of very, thinning out in terms of participation even more? Just the last few days, take that as an example, what we've seen. And what does it mean? Because, when you put this point forth, many say, well, it will continue like this because local funds are still getting money, a fair bit of money, and that will keep going into larger stocks. So the index may remain where it is with, a little bit of volatility, but the broader market, there is very little interest. Do you think that is possible?
Prashant, in the short term, you know that it's very difficult to call out these trends. But the one thing which I remember we had discussed a few months back on your channel was how the valuations of the mid caps were highly divergent compared to their own history and had gone at a huge premium to large caps, in fact as high as 40%. I think with that divergence having converged, so to speak, and with mid caps having seen a very steep correction over the last 12 months, I will not be too surprised that the participation becomes a little more broad based, as we are finding opportunities in small and mid caps as well in the last couple of months. So yes, the journey is always very stock specific. There are times when one particular segment of the market does get very expensive or very cheap. I think in the last, I would say the whole of calendar 2016 and 17 were years when mid caps had really gotten very expensive. We have already seen the reversion to mean, and therefore from that perspective, I feel that there is room for the participation to be more broad-based in calendar 2019.
Okay, all right.
My last point on this one is that near to the elections, when the anxiety levels of investors are always high, people do try to stay around the well-known large caps, rather than just go deep down the capitalization curve. So possibly that could be another reason for this behavior observed over the last couple of months.
Okay. All right, Ajay, we're going to leave it on that note. Thanks very much for joining in and speaking with us. Well, before we take a break, if we could just pull up Vivimed Laboratories, that stock is down in circuit, down around 20-odd%. In fact, it's lost 35% this week. So I just want to point out that yesterday the company did come out with a clarification that's saying that they do not find any sort of justification or reason behind the sudden decrease that they've seen in the price of their equity shares. Vivimed Laboratories is the one that I'm talking about. And despite that kind of clarification, we haven't seen any sort of upside or respite on the stock. So like you can see, it's down in lower circuit. We'll take a break now. But up next, Mahindra Jaju of Mirai Asset Global Investments will join in to discuss the latest developments in the IL&FS case. Stay tuned for that conversation.